Good morning, apes. This is Crystal Ball here, and this is the Week Ahead Show. I hope everyone's having a great day. We've got lots going on with AMC right now, so let's jump right into it. AMC right now having a good morning, up to 38.74, up 5%, 4.7%, moving pretty fast. Looks like the market's reacting well to all that news that just came out last week. There's lots going on right now, so let's jump right into it. Guys, I want to talk a little bit about the dark pool and these non-ATS systems like Citadel Connect. All the orders, or not all of them, but most of them, 70% or so are getting routed through the dark pool now, which means that orders are being filled very low, delayed. Orders can be front run, Citadel can trade ahead of them. There's all kinds of things that they can do to keep the price down through the dark pool, but it's not something where we should despair because we ran the price up to $70 plus. The dark pool was still around then too, and the dark pool percentage was very high as well. So it's something that we need to be aware of. Keep raising awareness of it. Keep trying to get change to happen there. But I won't hold out for it. The SEC's been working on this since 2008, and no progress there. So I think if we want change, we have to affect it. Another huge development that I posted about earlier is that brokers are now actually restricting short selling of AMC and GME. This is huge because there's too much risk for their credit departments to actually allow loaning and short selling of AMC. Too much risk of fluctuation, of the price being volatile and rising to the upside, which is obviously huge for apes.
Very volatile.
Okay.
If we let clients short it and then it fluctuates so much, it's too much headache for our credit department.
So you heard her there. That's obviously really bullish for apes. Another thing that's really bullish, or apish I should say, is all of the corporate business developments that Adam Aron's putting out there with the UFC, with potential other sports. This is huge. This is a game changer. We've got UFC at 100 theaters now. They were sold out the first time. They'll be sold out the next time as well. This opens the door for more sporting events. Maybe it's the World Series. Maybe it's other sports, NFL, hockey down the road, soccer, World Cup next year. Who knows? There's so many different events. We got the Jake Paul fight coming up. There's lots of possibilities for big revenue. People don't want to pay $75 pay-per-view tickets, and they like to be able to watch it in a theater with their friends, watch the game, maybe place a bet on the game, eat some food, etc., etc. As well as the UFC, Adam Aron's been buying theaters as well. AMC has been acquiring 2 new theaters in LA, big ones, and picking up other theaters all across the US that have closed down with the pandemic. So there's opportunities there as well. Who knows, maybe they expand to Canada one day. I know the theaters here are lacking, that's for sure. The other thing I want to touch on is Adam Aron being elected chairman of the board, which I think is huge because it's actually pretty rare for someone to be president, CEO, and chairman of the board. And in this case, I think it's a great decision because his strategic leadership has been fantastic. He's got full support of the ape community, media, and no one seems to be questioning or saying anything negative about Adam Aron because he's straight up been delivering, been raising cash, been exceeding expectations. So I think it's really bullish, and I think it's great for the company. Okay, this is very important, guys. I want to talk about the vote. As you know, the vote ends July 29th. That was the vote that was for everybody that held shares before June 2nd. And if you vote there, Adam Aron and AMC, they're going to know how many shares we own, including all of the naked shorts. And when that number comes back and it's more than the outstanding shares in the float, those shares are going to have to be bought back. Something's going to happen. SEC and AMC are going to review those numbers, confirm them, and we're going to have to put pressure on them to release those numbers and share the count. And from there, those shares should all be bought back. They were all illegal. They never should have existed, but now they're real shares. And guess what? They all have to be returned. All those shares that were sold short are going to have to be bought back. I want to talk a little bit about the short interest. We know the numbers on Ortex say 15%, but that's way too low. Doesn't account for naked shorting and all of the other exchanges and different loopholes that shorts can use to return their shares and hide their short interest. So what I wanted to do is do a little calculation here and come up with a ballpark estimate of what the short interest could be. So if you look here, 173 million shares total traded on average per day, times 20 trading days in the month, times 7 months that they've been shorting for, times 45% short volume, divided by the total number of shares outstanding. Now let's just see what that gives here. If you plug those numbers into your calculator yourself, 173 million times 20 times 7 times 0.45 divided by 513, 300. Okay, so that gives actually 21.23. Expressed as a percentage would be 2,123%. Okay, 2,123%. Now if you say to me, oh, but there's covering and return shares, okay, maybe some shorts shorted at the top and have covered. Okay, I'll give you that. So let's divide it by half. Still 1,000%. Let's divide it by half again. Still 500%. You know what? Divide it by half again. Still 250, 260. Divide it by half again. Still 132%. Are you seeing where I'm coming from? Anything over 100% is short squeeze territory, okay? So as you can see, the real short interest is likely off the charts and in MOAS territory. And if you think about how many shares we own too, those numbers are staggering as well. So there's 4.1 million shareholders. Well, likely more by now, but let's just take that 4.1 million number from back in the end of May. 4.1 million times 100 shares, okay, that's 410 million shares, or about 92% of the 448 million share float. 92%, and that's if we own 100 shares. But we don't own 100 shares each. How about if we own 200 shares each? That's 183% of the float. 300 shares each, 275. 500 shares, 458. I know many people who own more than 1,000 shares. So I don't understand these numbers at all. Let me know what you think below. Hey guys, I want to talk about the NSC 2021-10 regulatory filing that came out last week. This one is the controlled squeeze filing, I call it. There's a strategy in place where hedge funds are going to give their long securities to the DTCC in exchange for cash to buy back our shorts. There's a requirement for them to use the cash to buy back the shorts. They're going to give those longs as collateral and pay interest, okay? If they can't make those payments, they lose, those longs get sold. Otherwise, the longs are returned back to them once those short positions are closed out. So this is a way to, in their mind, I guess the DTCC's mind, to prevent a market crash. But you know, either way, whether it's a controlled squeeze or a violent squeeze, where apes push the price up so fast in a short matter of time that they can't, the DTCC can't implement this controlled squeeze. Whether it's a controlled squeeze or a violent squeeze, it doesn't really matter. It just only matters in the sense that it'll take, it may take more time, as much time as it takes the DTCC to implement this, which only allows us to buy more shares. We know the end is near, we just don't know exactly when, okay? We've heard about the failure to delivers and how those are due soon. Some people are saying 6 days from now. I've seen some information that says it may be 13 days, so another 7 days. We know it's coming soon. I stand by my earlier prediction that August is going to be a big month for us, okay? So guys, as I finish off this video here, we're trading up over $40 now, $40.35 and rising. Way to go, apes. What I want to say is the only way we're going to lose this battle is if we give up and stop trusting the process, okay? Shorts are going to keep finding new shorts to try to drive the price down. They're deep underwater on those $10 shorts from earlier in the springtime. And they're not going to cover the bulk of their positions, all right? Now, if we let the price slide, if we let go, ease off on the buying pressure, they can drop it with new shorts. So all we have to do is trust the process. We have more apes coming on board. The company itself is doing well fundamentally, exceeding expectations. Apes love the stock. We're not going to change. We need every ape pushing as hard as they can to get to the MOAS territory. It's not financial advice. I'm not telling anyone what to do. But at the end of the day, that's the way that we're going to win, is if we have sustained buying pressure. It's like a tug of war. Think of it as a tug of war. The shorts are on one end, pulling hard with new shorts coming in, and we're bringing new apes onto the rope, pulling. Some of us can buy, some of us can't. But when you have 5 million people, there's enough buying pressure to outbuy all those new shorts and to keep them trapped and force them into margin call land. All right? Guys, if you like this information, leave a like or subscribe below. Leave a comment and share on Reddit and Twitter so other apes can see as well. Apes together strong.